Good afternoon, everybody. Uneducated Economist here. So, buy low, sell high, right? You know, a lot of people have a hard time like wrapping their heads around investments or just like Bitcoin or silver or anything else because they keep trying to relate it to the dollar, and as if the dollar is like the base, as if it doesn't move. But the dollar has value within itself, and the dollar fluctuates. The dollar fluctuates to other currencies. And it's kind of odd because really, if you think about it, it's gold and silver or Bitcoin or to a lesser extent, if it wasn't so leveraged out, real estate because it's like in a limited supply. Anything that has like a certain amount, there's only so much, or it has to be worked in order to get more of. These things are the stable. They don't change too often, or they come in at a steady supply. It's the dollar that fluctuates comparatively. And a lot of people have a hard time relating to that because their job will pay them at a certain amount, their bills are a certain amount, things are set to them in a certain amount of dollars, and therefore they kind of see the dollar as like the stable, the set amount. And really, it's just as much of a fluctuation as everything else is out there. So when you hear about like dollar weakness or dollar strength, that's really how much it's compared to other currencies out there, and mainly the top currencies. So when you hear like dollar weakness or you hear like currency manipulation or stuff like that, it's how much dollars in circulation comparatively to another nation's currency. And right now you have the dollar weakness taking place, where a lot of people are saying the dollar is weakening compared to other currencies out there. And this is very true. And a lot of people are saying that this is where the inflation is going to kick in, that the dollar is going to weaken to zero, and that, basically the whole system will collapse eventually. I mean, that's ultimately what a lot of people are kind of saying out of the Federal Reserve and what the dollar is. I don't see the demise of the dollar occurring anytime soon. Will it eventually happen? Yes, absolutely it will. I mean, it's pretty much baked into the cake. The way the system is structured, that it is a self-destruction, that the debt will eventually consume the entire system and it will no longer be able to function properly. Are we there yet? Or no, but we're getting real close. But how long does it take? Who knows? And the situations that are coming up right now, especially across the nation and all over the globe, really, when you think about it, like I was just reading an article from Denmark where they have zero interest rates on a 20-year mortgage, fixed rate. I mean, holy moly, 0% interest for 20 years, fixed. This isn't like a variable rate that went negative at one point. This is a fixed rate that you can get on a mortgage. This is crazy. I mean, this is like things that if you had mentioned to an economist 15 years ago, they would have said, you're nuts. No way will that happen. But yet, here we are. So things are very strange and very different nowadays than they were even 10 or 15 years ago. And the way they go into the future is going to look incredibly different than what people are anticipating or expecting. Now, when it comes to this dollar strength or dollar weakness, a lot of people, again, are saying that it's going to weaken to zero, and I just don't see it. Already, now that the Federal Reserve has put that narrative out there about the inflation, about the dollar weakness, about staying super accommodative for the foreseeable future or until they meet their mandate of a 2% average inflation rate and maximum employment, whatever that means. Now, and especially on that average 2% inflation, that one kills me. I mean, who knows what that's really, I mean, it's just basically up to when they say it's okay to start raising rates. But that narrative that they put out there convinces everybody that inflation is going to come, and they're starting to find it. You see the interest rates are starting to rise, and you have to keep your eye on the 10-year. Just watch. You don't have to look at every single bond of every single market of every single place out there. Just watch the 10-year treasury. Everything is compared to that. Even the article I was reading about the Denmark mortgages were comparing it to the U.S. Treasury. Okay, the U.S. 10-year treasury. That is the benchmark. That is where everything goes. Where that goes, everything goes. And right now you're starting to see the interest rates rise on the U.S. 10-year treasury. The yield is. So that's an indication that people are fearful of the future and that they see inflation on the horizon. And they're demanding more money, more compensation for the future, for giving up that money. And you're starting to see it now. And this is where you're going to see the shift in the dollar weakness turn into strength. And the way it's going to come is from people like China, like, from the government, where they are now concerned about their exports. Like they're saying, yeah, we're going to stay plenty competitive. There is nobody else who can compete on the level that we are achieving, but our profits are going to drop if the dollar continues to weaken like this. Because what happens is when the dollar weakens, the yuan strengthens. And when it strengthens, their exports become harder for them to, or for other nations to buy off of them. But it's not so much that the other nations are having a problem buying. They're going to buy it. It's the profit margin that they get from it that starts to shrink. So having a strengthening yuan is very damaging to China, and they don't want to see it. And it's happening because the United States dollar is weakening. Now you're starting to find the articles talking about taper tantrums. Remember when this occurred back, a few years ago when they decided that they were going to start shrinking the balance sheet? They went into that to like rolling off of the balance sheet, and they called it a taper tantrum because the market started getting all upset about it. Right? Everybody started selling off, thinking, okay, great, now the super accommodative monetary easing is no longer here. It's going to be more difficult to get loans. It's going to be difficult to function in the markets, and everything starts to crumble. They had to almost immediately reverse course when it came to, autopilot, where they were going to let the, interest rates rise a quarter point every quarter until, they achieved a level where they were no longer accommodative or restricted to the economy. They found out right away they were restricted to the economy. They had to drop it back down to zero or immediately reverse course and start dropping the interest rates again until they eventually went to zero when the pandemic hit. I mean, for those of us who follow the economy, we saw the problems far before the pandemic hit. I mean, it was already in play. The pandemic just expedited everything. And so when I hear the COVID induced recession, and I'm like, no, the COVID expedited recession. The recession was definitely going to come. It was well overdue. It was well on its way. The yield curve inversion was proving it. I mean, everything was leading up to a recession, and then COVID hit, and everything got blamed on COVID. Nobody was looking back saying, hey, there was a bunch of problems leading up to this. Why don't we talk about those? I mean, that never occurred. September, when the repo thing took place, was a huge warning sign that there was going to be some major problems to come. And sure enough, they came, and everything got blamed on some, on this illness. Now, I shouldn't say just some illness. I mean, I guess, there's a lot of people who are very concerned about it. I'm not so concerned, but then again, I'm not really in the critical categories. So, what to expect out of the future here? You look at the dollar strengthening, buy low, sell high. Well, everything is off the charts right now. Everything is going up to their new highs. Bitcoin, I can't believe it. Like before I started the video, it was like almost $40,000 for one Bitcoin. I remember the first time I tried to go buy a Bitcoin, it was $18. Everybody said it was a scam. I said, I know, that's okay. I'm going to blow $40 on 2 Bitcoins, learn how to throw them around a little bit. I didn't even care. And now here, those 2 Bitcoins would be worth close to $80,000. It just shocks the hell out of me. Stock market, all-time highs. Silver and gold's reaching all-time highs. I mean, it's way up there, 1950 or something? Silver's pushing up to 30. Silver is so undervalued comparatively. I mean, for its recent numbers, it's doing really well. But I remember silver at $50. So it's got a long ways to go before it reaches a level that the stock market or gold or Bitcoin or anybody else, any place else has. The only other place that you can see where there could be a possible move upward right now is dollars. Everything else is at their all-time highs. Buy low, sell high. Well, if you buy dollars, right now they are weak. They are low. You can get a lot of dollars for your gold. You can get a lot of dollars for your Bitcoin. You can get a lot of dollars for your stock market right now. I'm not saying that's what you should do. I'm just saying you can get a lot of them right now for it. And if there was a crash in the future, if there's a downturn like a lot of economists are talking about, you're going to want to have a bunch of dollars to buy that stuff when it goes on sale. For months now, it's been nothing but talk about inflation, super accommodative, zero interest rates for the foreseeable future, never going to raise them again, and yet here they are. They're starting to go up. Hear the talk. Hear the rhetoric about how the balance sheet is going to have to start rolling off. If they keep this super accommodative environment, zero interest rates for the foreseeable future, houses will become unaffordable to anybody. Everything that has a loan attached to it will turn into zombie loans because people really won't be able to afford them. They'll just be able to make the payments because the interest rates just keep dropping deeper and deeper into the abyss. And not being able to properly, profit from a borrowed investment. To take your investment and lend it out there and make a profit from that. When that diminishes and you seek out ever riskier opportunities, it creates an environment for zombie corporations, zombie loans, zombie everything. Okay, there has to be a return on investment that's beyond the borrowed money that you had taken to do the investment. It's hard to wrap your head around all this stuff, but once you realize that we have reached this zero lower bound, that the return on capital has gone negative, the volatility is dropping. This is not an environment that's going to do well. And all they talk about now as far as dealing with it is lots of regulations, because that's what it's going to take. It's going to take a lot of money pumping, and it's going to take a lot of regulations to keep the irrational exuberance from blowing everything up. I'm going to leave a bunch of links down in the description for you guys. We're coming into some really interesting times. I mean, I know I say that all the time, but it's just like everything changes. Like I said, if you asked an economist 10, 15 years ago to give a description of what today is going to look like, none of them would be describing this. None of them. So we are brand new place here. All right. Uneducated economist, you guys let me know.